Hey, what's going on, my friends? In this video, we are going to dive into this very simple question. How many bank accounts should you have? This expert says four is the magic number. And by this expert, we're talking about Tiffany, the budget nesta, Alicia or Aliche. Let me see how this pronounces it. Let's see if the speech thing Aliche is how this says it. So I'm hoping I pronounced your name right, Tiffany. Um, and so she believes if you are an individual out there, not talking about your businesses, talking about you as an individual, you should have four bank accounts. And these bank accounts will help you with budgeting and managing your money, which will help you with building your wealth, or at least will play a role with helping you to build your wealth. She says you should have two checking accounts, one for bills and one for spending money, have a savings account for your emergency fund, and then a second account for other savings. And we're going to dive into this a little bit more, but I thought it was a great time to bring this up because I literally just got back a few hours ago from the bank where I opened up a new business account with DCU. So this is a new business checking and savings account that I opened with DCU, and I'll make a video diving into this. But it just reminded me, I mean, if I'm opening up multiple accounts for my businesses and whatnot, it's like I should probably have a few for myself because I am essentially a business. If you are someone who's a sole proprietor, if you're part of the gig economy, if you work for Uber, for Lyft, for DoorDash, maybe you work for yourself, you absolutely should consider opening up multiple accounts where you can then allocate your money based off of your needs, based off of your expenses. And that's really what this article is going to dive into. As she says, there's really a 4-bucket system, and those buckets are checking, savings, savings. So the first account she believes you should have is a checking account for your bills. First, set up a checking account to pay your bills. You'll use the money in this account to pay for housing, utilities, insurance, your car loan, any bill you have to pay. She recommends that you do not get a debit card for this account. Don't get a debit card for this account. This way you won't be tempted to spend your bills money on other things. When you want to spend money, you can use your other checking account, which is number 2, checking account for other expenses. This checking account is for everything other than your bills. You can use it for entertainment, meals at restaurants, or gifts for your friends and family. Go ahead and attach your debit card to this account because the money is primarily for spending. Number 3, savings account for your emergency fund. Now, if you guys are normal on this channel, you know I've preached about having that emergency fund, and she actually talks a little bit about it, so I won't preach about it too much on my beliefs. We'll see what she says. An emergency fund is money you only use when the unexpected happens. Maybe you lose your job. I literally just made a video talking about how I lost the job. At the time, I actually didn't really have a big emergency fund. I had something, which was helpful, and it actually did come into play, but it wasn't to this extent. So maybe you lose your job, or your car breaks down, or you receive a huge hospital bill. You only touch this money if there's an emergency. So it's wise to keep it in an account that's separate from the ones you use for bills or other savings goals. Most experts recommend setting aside 3 to 6 months of necessary expenses in your emergency fund. The rule of thumb is that you should have 6 months expenses if you are a 1-income household and 3 months expenses in a 2-income household. So if it's just you, no one else that's paying your bills and whatnot, that you live alone, well, you want to have up to or at least 6 months of expenses saved up. Number 4, and her final account is another savings account that you're going to use for other goals. Finally, there's an account for other big savings goals. You might use this account to stash away money to buy a car, make a down payment on a home, or go on a vacation. If you use a bank that makes it easy to save for separate goals, you could even create individual saving buckets for each goal in one account. How to manage these 4 bank accounts? Well, she called her budgeting method split it before you get it. If you received direct deposits, ask your employer to put a certain percentage or dollar amount of your paychecks into each of these 4 accounts. And if you're self-employed, this is something that you can do on your own. When you get that check, if you get that direct deposit from Uber, from Lyft, from Fiverr, from TaskRabbit, well, then you might put 35% of that, that money of your paycheck into your bills checking account. Then you might put 20% into your spending account, and then 20% into your emergency fund, and then the last 15% into your second savings account. By splitting up your paycheck before it hits your bank account, you won't be tempted to spend your money that you don't have. You'll also consistently work toward your savings goals without even thinking about it. To split it before you get it, you'll need to do the math beforehand. Figure out how much you put toward all of your bills each month, what you need in an emergency fund, and how much you'll need for a big purchase, and how much you have left over. If your employer can't divvy up your paycheck for you, well, there's a simple solution. You can have them deposit the full paycheck into your bills checking account, and then you can set up the transfers yourself. And this is what I said a moment ago. When that direct deposit from TaskRabbit hits your checking account, well, you got to jump in there and allocate the money appropriately based off of how you've decided to set up your kind of budgeting workflow. If you want to do 35%, going there, 20% towards this, 20%. I mean, you have to decide what makes most sense based on your needs. This might be a good general rule of thumb. Other people, some people like to say, hey, we're just going to focus on paying ourselves first, meaning you put a small percentage that's going to go towards your Roth IRA, your retirement, in which this isn't even something she really mentions. I mean, she does say there's a savings account for other goals, but that's kind of different, and technically a Roth IRA isn't really a checking or savings account. So I actually don't want to confuse you guys there, but yeah, I mean, I guess really when it comes down to the bare minimum of these accounts, so not talking about your retirement, this I think is a good strategy. I have, because I'm self-employed, I was a sole proprietor before I had my LLC. I did already, I've had a number of different accounts, and I basically had goals or had accounts with particular, emphasis on what they would be used for. But I never really, this is a while ago, I didn't really have it in stone. It wasn't like, okay, like now I can tell you guys I have an emergency savings fund that is set aside. It's on its own, not connected with either of my regular credit unions that I work with, DCU or Members Plus Credit Union. And in that particular situation, it's like that money is there. I put a little that goes towards it every month as it's continuing to build up to meet 6 months, because I'm not quite there yet. I'm over 3 months though, so we're heading in the right direction, but we're still not there. So I just do a small amount that goes towards it. And my particular approach specifically, and maybe this is a video for another day because I don't want to drag this video on, but ultimately, instead of just focusing on building that up to 6 months, I reached my 3-month tier, and now I kind of do a drip approach where I have a small amount that continues to go towards it while I'm also investing in my retirement, in my future with my Roth IRA, and so on and so on. That's my approach. That's, again, taking it a little beyond checking and savings accounts, but it all aligns with managing your money and helping you to be better with how you spend your money and having control of your money. Because if you can't do it now while we are all kind of budgeting on a budget and this, that, and the other, you're definitely not going to really be able to do it when you start making the big bucks. Or at least if and I know some people, well, I'm not going to need you. I'm going to just pay people to do it. Well, hey, we hear them stories all the time about athletes and actors and other people who have gotten, basically misused and abused because they didn't really know, anything that was going on. They had no idea. So yes, you can hire other people to do these things, but it's important to have just the fundamentals, have some of the basics down so that you are equipped and that you are at least, going to be able to kind of identify red flags here and there, things that don't look right necessarily, because this is your hard-earned money, and this is, whether we're talking just about you, we're talking about your kids, we're talking about trying to actually build generational wealth. Either way, you certainly want to be in a position where, like I said, you are protecting your money, your hard-earned money, and you're managing it in an effective way that will help you with making the most of it, but also getting your money to work for you eventually. That's the big goal. That's the key. Getting your money to work for you so that it's not just losing its value with inflation and whatnot, but it's actually multiplying and doubling and this, that, and the other. It's all about, we want them interest, right? We want that passive income and so on. But I'm drifting right now. We talking about these 4 checking and savings accounts. I thought this is a great way to help you guys. We got Thanksgiving here. And kind of just another way to show my thanks to a lot of you guys out there who continue to support me on this channel. Because it's important that you guys, again, just have the fundamentals down of managing and budgeting your money. This isn't really about budgeting, but it will help you with doing so because you're going to have those accounts that are specifically focused on your bills and your expenses, those things that are most important, that you're going to say, okay, this account is focused on that. Anything outside of that, all right, we're going to get there, but let's make sure we got my lights and my roof, and we got food on the table, clothes on my back, and then we go from there. So I'm going to wrap it up there. I hope you guys found this video helpful, motivational, encouraging as you continue to strive in your journey towards that financial freedom stage that we're all after, right? I know we're all after that financial freedom. And maybe you're not. Maybe you're like, hey, I just want financial independence. Freedom, that would be great, but I want the independence for now. Let's focus on that. Whatever it might be, I hope this video was helpful for you. If so, like this video, give it a nice thumbs up. I do appreciate you guys watching. Also, subscribe to the channel, hit that notification bell so you guys can stay up to date on all of my latest and upcoming video content. But all right, my friends, you already know I got to keep it moving. But I'll see you in the next video. Peace.